Okay, so let me get this straight. The United States, the country that spent 30 years constructing a global sanctions regime to contain Iran's nuclear ambitions, just handed Tehran global banking legitimacy and the right to sell oil in US dollars. The reason? Gas prices before the midterms. That is the entire trade. And that same week, Wall Street opened with dot-com bubble comparisons flying before noon. And the administration quietly canceled a Senate DNI confirmation hearing to keep a loyalist running the intelligence apparatus without a shred of oversight. We're breaking down clips from MSNBC's Money Power Politics with Rule, Insana, and Nathan, and the Chris Hayes podcast with Alex Wagner. Subscribe if you're new. Let's get into it.
All right, let's get down to business. As Washington and Tehran continue to negotiate, we learned the administration will allow Iran to sell their oil for U.S. dollars. Okay, why is this a big deal? Okay, it is a decision that upends decades of U.S. policy that was meant to make it harder for them to develop their nuclear program. For years, Iran had sold oil largely to China through a secret fleet of tankers. Well, now it's on. It can export oil to the open market and this time be paid in dollars. And according to Steve Ratner, that could bring in as much as $10 billion for Iran in the next 60 days. And granted, it is only 60 days, but do we really believe that these negotiations are going to be done by then, or are they going to be extended? I sure think they are. So the administration is giving Iran one of the things that it has desperately wanted for years and years, before Iran has delivered on the number one goal the United States had going into the war, ending its nuclear weapons program. Let's bring in MS Now business analyst Ron Insana and Dan Nathan, co-founder of Risk Reversal and a CNBC Fast Money contributor. Okay, Ron, the markets are going to open in 2 minutes, and we're definitely covering it. But I want to talk about who benefits from this move with Iran first. It blows my mind that we would offer such a concession.
All right, so let's actually unpack what just happened. Insana's point is the critical one. Letting Iran sell oil in US dollars is not a routine trade tweak. It is global banking legitimacy. The 2015 JCPOA was built entirely around financial leverage, the ability to cut Iran off from dollar markets as a negotiating tool. The US walked away from that deal in 2018, and now, instead of rebuilding that leverage in exchange for verifiable nuclear rollback, we are handing Iran the market access it wanted, as a sweetener, with nothing concrete on the other end. That is not foreign policy. That is getting your car repossessed and calling it spring cleaning.
Okay, and that's what I want to stay on, Dan, because in theory, if this happens, we could see oil prices drop. That's a huge priority for the president. But the reason we went to war to begin with was Iran's nuclear capability. So is the president basically going to tear that up, throw it out the window, and say, no, it's all about oil prices now?
Yeah, well, I mean, that's really what happened, right? If you think about the whole taco trade over the last few months or so, it really had to do with prices, right? It had to do with energy prices, had to do with food prices, and any derivatives of oil. And, when you think about who benefits here, obviously the Iranians benefit, right? They have been selling their oil, 90% of it, to China. They've been selling it in Chinese currency, right? Mm-hmm. This has been a huge, huge win for China over the last few decades or so since these sanctions have been in place. And when you think about what Iran is able to do now, they're able to actually bank around the world and use dollars, right, to do that, which gives them access to whole different sorts of markets, that sort of thing, a level of legitimacy that did not exist, right, if you think about over the last 15, 20 years or so. So to me, Iran is obviously the winner here. China is the loser, and this could, cause some tensions between our trade sort of situation with China also.
Dan Nathan just said the quiet part loud. Domestic gas price optics beat nuclear non-proliferation. Here are the receipts. U.S. Treasury sanctions on Iran have explicitly cited the IRGC, the Islamic Revolutionary Guard Corps, as a direct beneficiary of Iranian oil revenue. That is not an opinion. That is documented federal policy. So when you unfreeze that revenue stream and hand Iran global dollar access, you are not building peace. You are funding the procurement arm of a sanctioned military organization. Full stop. Stephanie Rule asked what exactly was received in return. Based on what these analysts laid out, the answer is a pre-election talking point about pump prices.
All of this just begs the question, then why exactly did we go to war to begin with? It is now 9:30. Wow. Markets have opened. In the last 12 seconds, they're down almost 300 points. This seems to be led in the last day by the very same tech giants that have led the market soaring. What's going on here?
Well, it really does have to do with this bubble that's going on with the data center build out, right? And if you think about some of the biggest companies in the world, right, they are the Google, the Amazon, you know, all these funds that are like basically building out. They're using hundreds of billions of dollars to build these data centers. And, you know, this enthusiasm about this compute and this technology has caused, you know, stock markets like South Korea's stock market has doubled in the last few months or so. Taiwan has gone up in a straight line. Now, our NASDAQ is up about 20%. It's just a few percent from all-time highs. But the concern right now is that this overbuild and this misallocation of resources, we have companies, including SpaceX, that just went public, raised $85 billion in IPO. They immediately come out and do $20 billion bond sale, right? Google's selling stock, Meta is selling, Amazon's selling. So if the companies are selling and you keep buying, there's got to be some sort of divergence there at some point, and that's what is coming out of the stock market right now. You see that the S&P 500 is down, 1.5%. The Nasdaq's down 2.5%. South Korea, which is made up of basically their stock market, two stocks, Samsung and SK Hynix. They made all the memory that goes into servers, that go into the data centers.
All right, what Dan Nathan just described is not a routine correction. The AI infrastructure buildout, data centers, GPUs, server farms, companies poured hundreds of billions into this on the assumption that demand would justify every single dollar. The market is now questioning that assumption. And when the sector that has been carrying the entire index starts repricing, you do not get an isolated dip. You get contagion. South Korean semiconductor stocks were catching it before U.S. markets had been open 5 minutes. That is synchronized global capitulation. Not a bad Tuesday in New York.
Down 10% overnight. 10%.
Ron, why today, though? People have been worried about tech companies and AI overbuild, overspend for months and months. Why today? Why this week?
A couple of things. I mean, in South Korea, which was down 10% overnight, it's now down 20% from its all-time high. There was some concern about the use of these highly levered exchange-traded funds, where they're basically amplify both gains and losses for investors there. Margin debt in South Korea, which is borrowed money used to buy stocks, went to a record, as it is here as well. So we have a lot of people who have borrowed a lot of money to buy these big winners, and when those stocks turn on you, you're being forced to sell. And if you look across the entire globe right now, Steph, every market in the world is down. Crypto is down. Oil is down a little bit. That has more to do with Iran. Gold and silver are trading lower. So you're seeing forced selling across the board. And as Dan was saying, these big gains that we see in the semiconductor index, which was up at its peak, over 100% year to date. We're not even halfway through the year. South Korea was up 115% after being up 75% last year. This is as frothy a market as you're likely to see. Micron reports earnings tomorrow. That stock's gone straight up. So there's a lot of concern if they miss the numbers, people are going to get hit pretty hard. So listen, we've gone pretty far, pretty fast. There are shades of 1999 here. I know people don't like to hear it, but it's true. And it's a real thing. And
So let me make sure the math is clear here. The administration unlocked billions in Iranian oil revenue, banking legitimacy, global dollar access, the whole package, specifically to stabilize energy prices and, by extension, calm markets. But the market that is crashing right now is not being driven by oil. It is being driven by an AI infrastructure bubble that was inflating the entire time this Iran deal was being negotiated. And Insana is drawing direct comparisons to 1990. Margin debt at extreme levels, high leverage ETFs amplifying every loss, forced liquidations cascading across global markets simultaneously. SpaceX dropped 33% on its IPO. The administration gave away the nuclear non-proliferation framework for market stability. The market is not stable.
Postmark this. It's Wednesday, June 17th. The president has just canceled the confirmation hearing for Jay Clayton, who is nominated to be the head of the intelligence, DNI, so that his temporary appointee to that, Bill Pulte, who's sort of this comically hackish, factotum who basically has been like doing the dirty work for Donald Trump at the mortgage agency, where he apparently has been rooting through people's private mortgage documents so he could gin up pretextual criminal cases against critics. And there's a deal that's going to be signed in Switzerland on Friday. Let me start with this. I thought there was a really interesting moment today. He's at the G7 and he's going on. And I mean, it's truly insane how long he will talk. I still haven't gotten used to it. He basically admitted defeat. He said, I didn't want to be Herbert Hoover. We would have had a great recession, which was like him basically saying, they got me. If it went on much longer, I would have been Herbert Hoover. We had a great recession. I had to kind of knock my king over and walk away from the table. It was a pretty remarkable admission to me of what everyone else who's been watching this has already known.
Chris Hayes just flagged something that deserves significantly more attention than it is getting. The administration did not delay a Senate confirmation hearing for a permanent director of national intelligence. It canceled it. The current acting DNI is Bill Pulte, a loyalist with zero confirmed Senate mandate. Confirmation hearings exist precisely to create accountability. Senators ask questions on the record under oath, creating a public paper trail. Cancel that process, and the person sitting in that chair answers to exactly one person. Hayes is alleging Pulte is actively using that unaccountable position to target political critics. A Senate-confirmed DNI operates under legal constraints. An indefinite acting DNI with no hearing has fewer. That is not an oversight. That is a design choice.
On the heels of him saying, I love the inflation and I don't think about Americans' financial situation, the truth never comes out. So I'm with you. The idea that we are actually seeing his true lizard brain, like the reptilian, the most essential reptilian sphere of his brain, is an unusual thing, but also a testament to how much this is a surrender, how much this has broke the administration, and the fact that this is the dumbest, we have a history of fighting stupid ass wars in the Middle East. This is by far the dumbest and the worst. Well, maybe not the worst in terms of loss of life, but pretty fucking bad. Nothing gained.
The only reason it's not the worst, which again, I guess this is a weird thing to give him credit for, is that he knocked the king over pretty fast. Right? Like it wasn't like 5 years of this.
It's the nature of warfare too. I mean, let's just say that technology has changed, which is also why Iran effectively won. But I mean, let's not give any credit here because none is due. This is a white flag. The leaked text of this DocuSign, I cannot call it a deal. The memorandum of understanding, which Iran is saying is not the accurate, but it's a wish list. It's a wish list of Iranian demands, and it frees up $300 billion, probably $324 billion for them. They get to own the strait. There's nothing in there about not tolling it. There's almost certainly going to be a tax on anybody that wants to go through there, and there's nothing.
And so here's the line. If someone brings this up at the table, the administration traded 30 years of nuclear non-proliferation leverage for a midterm gas price headline. The stock market is drawing 1999 comparisons, while the AI infrastructure bubble reprices in real time. The DNI confirmation hearing was quietly canceled, so a loyalist stays unaccountable. And per Hayes and Wagner's read on that G7 press conference, Trump's personal motivation was not strategy. It was fear of being remembered as Herbert Hoover. The irony being, Hoover's defining failure was superficial quick fixes applied to structural collapse. The White House reflecting pool is currently green with algae. None of that is spin. Those are receipts. Hit like, subscribe, and share it with someone who needs to see it. I'll catch you in the next one.